What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon.
I understand that there are power lines that are getting kind of close.
What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Anthony Walker. How you doing today, Anthony?
Doing well. How are you doing? Thanks for having me on. Couldn't be more grateful.
Awesome. And I'm in a great mood too because I don't know if you know this, but we are joined today with my very favorite audience member. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate investors, syndicators, buyers, sellers, all that kind of stuff. And you may ask yourself, why would I do such a silly thing? Well, if you've ever heard of off-market, private, also sometimes called 506B deals, you'll find out that you need to have a documented prior substantive relationship, or else the SEC will get ants in its pants. So I have everybody who I might do business with onto the show. We take 15 minutes. I ask them the questions I need to figure out if there is overlap in our businesses. And the best part is you get to learn how to effectively communicate on the subject of commercial real estate and how my guest fits in. So Anthony, before we get too deep into your business though, do you want to say a thing or two about yourself?
Yeah, absolutely. I'm one of the managing partners and owners at Cornerstone Commercial Investments. I operate as the chief investment officer. So I'm the one managing our capital raising, underwriting deals, looking at acquisitions, and making a lot of our risk-adjusted return decisions and kind of our overall how our business and investment strategies impact our investors.
All right, I love it. So the first segment in this show is the 5 distinct motivations. It's super duper important to know. But before that, I gotta say, but wait, check your 8. Anthony, I don't know if you can see through the camera and down at the 8, it's the audience is 5. There might be this hideous subscribe button down there that they should probably do something. Okay, it's a stupid joke. But anyways, the 5 distinct motivations. Now, these deals, they take months, and that's even just to close, and then you're operating them for years. And it's pretty easy for somebody to want to just give up. And that's why it's important to me to know the motivation of my guest and what exactly is going to get them to stick around long term. And so these 5, they really tend to cover all the bases, even though people have their own whys. The first one, preservation of purchasing power. What's that all about? There's a lot of people out there, they have a portfolio of assets, and the way that they make ends meet is not from working, it's from the proceeds of ownership. And if you're in that kind of situation, then why would you bother doing another acquisition? Well, there's a few different circumstances. One is if inflation is rearing its ugly head, you're going to need to make a new acquisition because it's eating away at the purchasing power of the cash flow. The other circumstance is if it is a distressed property, so you can buy at a steep discount, like when there's an asset crash. That's not where I am. Where I am is trading time directly for wealth. What's that all about? Well, my background is from the CRM industry. I've owned a web development and CRM online funnel agency since 2011. And when I started in 2014 working for doing all of that for real estate firms, my boss at the time was flipping 10 houses a month. And I was looking at how much he was making and how much I was making. And I was noticing, hey, wait a second, high salary, high wage earners pay more in tax than anybody else. So I was thinking, how could I pivot to where I'm being rewarded in the form of deployed capital, AKA equity, so that I can lower that tax burden. So that's what I'm up to, but that's a little too abstract for some people. A lot of youngsters, they're more interested in taking control of their schedule. Maybe that means they're trying to fast track their retirement, or maybe they just want to have more time off, like fewer months per year that they're working, fewer weeks per month or something like that. But the idea is anybody who picks this one, they're looking to eventually tone things down, which is in stark contrast to the next group. They're just plain ambitious. They want to buy their entire hometown. They want that generational wealth. wealth, to make sure that their great grandchildren never have to hold a day job. And that's why they're making their acquisitions. It makes them fantastic members of a team because they're going to be hustling into their 90s, just like the last group here, but their motivation is slightly different. They found a sector of society, or maybe it's animals, maybe it's the environment, maybe they want to send people to space, who knows? But regardless, there's a substantial financial part of making a big impact. And so some people are picking up these commercial acquisitions for that reason. Now, Anthony, of those 5 different motivations, what combination of those would you say describes you best? What jumps out to you?
Yeah, great question. So mine would A, be inflation, the devaluation of the dollar, actually. So inflation isn't really that things are going up, it's that your dollar's worth less. So by buying real estate, you preserve that wealth, but also you build that wealth. That dollar actually gets worth more instead of devalued. Instead in a bank account, even if it's in a 5% treasury right now, it's getting devalued. And the government does that on purpose, and they're going to continue doing that. So every hard-earned dollar you make, you put into real estate, it's not losing value, it's now gaining value. And number 2, for me, it's all about freedom. I don't really care about, anything else. I'm going to preserve my wealth. I understand you need money to do things, but I want to have the pure freedom to, go home and spend time with my family, friends, have freedom of relationships, have freedom of wealth, have freedom of finances, have freedom of travel, just pure freedom to do what I want. And that's what I'm chasing. I mean, really, I tell people all the time, financial freedom is amazing. And, people are chasing this financial freedom constantly throughout their life. They want to have financial freedom by the time they retire. But in my opinion, financial freedom is the first step, and that should be your main focus to get at a young age. Because then when you're financially free, you get to truly chase your passions and find your purpose in life.
I love that answer. It's fantastic. But there are risks involved in any business, and commercial real estate is no different. And if you've ever been involved in a 506B syndication, the securities attorney for the issuer will insist that you fill out this questionnaire. It's got all sorts of really invasive financial questions. Basically, you're sharing more about your financial situation than you possibly know about your own parents' financial situation. But there was one question in that questionnaire that I felt it didn't really answer the question it was trying to answer, and it was the tolerance for risk assessment. So what I've done is I've got a fill in the blanks question for that. So please, there are many popular investment asset classes, but I think blank is too risky. It can be inside real estate, outside real estate. What's too risky for you, Anthony?
I would say putting debt on land right now would be too risky for me. We do a lot of developing. We buy some value add, but our core, asset is ground up development, and putting debt on land. Basically, you're paying monthly premium on a piece of land that is not cash flowing. So I think that's far too risky in today's environment.
I love it. I love it. I'm just eating it up like this. Subscribe sandwich right here. Is that intense or what? But that's the way that I let everybody know it's time to pull out the Dan Does Deals Commercial Core Competency Cube, and you can get your own copy for free at dandoesdeals.com. And like a complete dummy, I didn't even ask for your email address. You can just click it and download it and print it out, and you can practice with your friends and family and all that sort of stuff. And why would I do such a silly thing? Well, I just want to make sure that you can express yourself effectively on the subject of commercial real estate deals, because I think that's the real bottleneck to success. If you can't express it and explain it well, you're not going to have a whole lot of success in this business. But in each episode of Chance Encounters, I go through all 6 sides of the die so that way you know how my guest fits in. Let's get started. Repositioners are people who are acquisitions people. So they look at a bunch of different properties and they do a bunch of different paperwork. What's this paperwork, you may ask? Well, the paperwork, they have a fancy word for it. It's called underwriting. They underwrite the deal. That means they do the math, they do the arithmetic, they do the predictions. First of all, to find out, is this property even making the amount of money that the seller / broker is claiming it is? Because it quite frequently is off by a fair bit. But they call these people repositioners, even though the more common word is called these guys investors and these guys investors and those guys investors. The reason why they're called repositioners is because they're figuring out how can they change how the property is run so that they can find more upside. Now, one of the most confusing from the outside parts of being a repositioner is you have to have financier or investor relations. Financiers being people who only deal with paper and money. They do not do any operations. They don't do any asset management, anything like that. They're just basically lenders. But the reason why the repositioners need to have a huge network of financiers is because if you can secure a more advantageous loan, that goes straight to the profitability of the business because it's a lower expense in debt service.
Absolutely.
So that's why that's what that's all about. But the repositioner's more traditional way of finding more ways to make the property more make more money is to stop those Benjamins from going down the toilet in the operations and asset management. But of course, there's a lot more to operations than just unclogging toilets and collecting rent and mowing lawns, that sort of thing. Like one of them, the few things that I add to GP teams, one is automation ability because of my CRM and programming background. And the other one too is if you have a vacancy problem, then somebody with some marketing chops is going to have to step in to get those units filled, even if you are in the bigger properties like 100 unit plus where you're outsourcing to a property management company. But operations, because it's an old business, chances are there's not too much wiggle room in there. So the repositioner will frequently get a contractor team involved to do a value add or do renovations. In other words, they're going to make the units nicer so that the future residents will be happy to pay more in rent than the previous one, and therefore there's more upside. But you have to be super duper careful about your expenses on contractors and capital expenditure in general, because if you're out there gold plating toilets, you're not going to get any return on investment on that investment. So somebody has to make sure that they stay to schedule and they're not using subpar parts. And if you're like me, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because that will not be me. I'd still be stuck at an airport in an hour or two. So the locals are the accountability, able to keep an eye on the contractor team's work and the operations, make sure that they're not, faking photos or whatever. But when the repositioner has a specific property in mind and they've assembled this team, they'll turn around to the financier and say, hey, there's this awesome property. It's 350 units and it's tens of millions of dollars. You don't have say tens of millions of dollars you want to lend us, do you? Well, there's going to be a problem with that little plan, especially if you do not have a sponsor or KP. What's that all about? I've gone through my gurus program or my course on all of this, and they weren't talking about KPs and sponsors. Well, let's say that you're a physician or an attorney or an engineer, something like that. You and a circle of friends decide to take over a commercial property. Well, the problem you're going to run into is you're not going to be eligible for the commercial loan unless somebody in the fold already owns a similar asset. So somebody has to already have a 350 unit apartment complex if you are going to get a loan for a 350 unit apartment complex. But on top of that, you need a balance sheet among the ownership team of at least the amount of the loan, and you need a certain amount of liquidity. But if you have all those pieces, you got yourself a commercial real estate deal. So Anthony, you already said that you're on the financial side of your business. So I imagine you're doing the underwriting and you're also doing investor relations, but I don't want to put words in your mouth. Where do you fit in on this die?
Yeah, great question. I mean, so we have, I'm local, I live in Coeur d'Alene, so I go to our projects here locally. Financing, I help with the underwriting. Me and my business partner, he's our CEO and kind of CFO role, helps with the financing. And then we look at a lot of the operations pretty closely as a team. Right now, you see insurance costs are way up. You see taxes are up because values are up. All these different things are pushing up expenses. And now that we have these high interest rates are pushing down rent. So the margins are compressing. And so we all kind of look at and to put all of our resources toward making the most profitable investments for our investors.
I love it. I love it. And that dovetails right into the next question, which is the buy box. So when investors and syndicators or whatnot are talking to each other saying, hey, what you looking for, what you're working on these days, we're really asking for three things. The first one's geography. Where is it? Which state, which county, possibly even which neighborhood? Okay, that location is definitely going to matter. Second one's going to be the size. Most of my guests on this show are in multifamilies, in other words, apartment complexes. And the way that you define size in apartment complexes, it's by the number of units. And the reason why that's important is because you're going to have a completely different type of team who takes over 5 unit or 15 unit apartment complexes compared to the 150s, the 350s, and so on. So that size definitely matters. Of course, other forms of commercial real estate like self-storage or industrial, they won't measure by a unit count in quite the same way, but still the size is going to matter. But the third one is class. And unfortunately, they use that exact same word for two completely different things. And so I split the word class into condition and area. So when we're talking about condition, it's how old is the building? How beat up is the building? How up to date is it? Is it full of amenities and luxuries, or is it really supposed to be no frills, just a place to lay your head and that's about it? That's the condition. Now, the
Right.
area, on the other hand, that is talking about what are the school districts like in the area? What is the crime rate like? And then, of course, the old saying for real estate about location, location, location. I hate that one because I don't think it's very clear. What they really mean is traffic, traffic, traffic. How popular is that area? How many people are going by that property on any given day? That's the area. But both the area and the condition, they define the desirability the same way as they do in grade school for rankings, where you got A plus at the top and then A and then A minus and then B plus and so on. So Anthony, as far as you and your team goes, what's easier to say yes to and more difficult to say no to?
Yeah, we have a good time saying yes to locations in Idaho, Montana, Central Oregon, Bend area, grounded developments. We are very location oriented, but our locations are more oriented. We like to be near downtowns, near large employers, or off of major highways so they can commute to work. So we focus on, A kind of locations, B plus locations. Really like location. It really drives rents and drives demand for our product. And then we take those say it's an A minus product or A minus location, and we'll build like a B plus product there. So we're building, 3-story walk up, something that's not super luxury, but we're also not building super cheap. We're right in the middle. And our bread and butter is catered toward the median income for an area. So if, let's say your median income is, $80,000 a year for your household median, average income there. We want to be 30% of that, so roughly $24,000 a year. So, we'd be comfortable charging $2,000 a month rent. That's just an example, but that's our bread and butter because that's typically where about 30 to 40% of the market lies.
I love it. I love it. And I got to tell you, one of my favorite things about commercial real estate is that because it's multifaceted, you got these 6 different sides on the die. Nobody's going to be all of these roles for any meaningful
Right.
amount of time, but we all have our own unique skill sets. So that means we're going to be better suited to help some people more than others to complete those teams. And
Right.
I always like to ask people who they're looking for. Me personally, it's the sponsors and KPs I'm always looking for, and also the locals for the obvious reason, which is I'm from the internet. So I need people who are actually not wanting to do the internet piece of things, the automation and whatnot. But Anthony, I don't know if you have any 506B deals going on right now. If you do, make sure you don't mention them because that's not okay. But it's okay to say that you're looking for people who want to get involved otherwise. But who are you disproportionately well suited to help?
Yeah, I mean, I would say we're disproportionately well suited to help, people that are busy professionals, so doctors, lawyers, attorneys, business owners, looking to invest passively and then continue crushing and making more wealth in their business. You see it a lot where people want to try to take away from where they're making the majority of their money to try to invest in a real estate. And so we're really looking for people who want to go all in what they're doing so they can make way more money there and then just invest passively.
I love it. I love it. And then as far as how to reach out, me, I got this really distinct last name down here. So that makes me really easy to find, especially on LinkedIn, which is where the two of us ended up meeting. But if you scan this QR code with your phone, that brings you to the FAQs page of 506 Beame, which is the platform I offer the service of documenting your substantive relations. It's not an easy thing to do with a CRM, and I take over all the IT guarantee for all that, so you know that it's secure and it'll stick around. And the thing is, you do have to have that documentation of your relationships, or else when you get audited by the SEC, like if you hit a certain amount in assets under management, then you're going to be behind the 8 ball. So you got to have that documentation in place. But Anthony, if people want to reach out to you, what are the best ways?
Yeah, definitely LinkedIn, Anthony Walker on there. You should easily be able to find me. I'm on Instagram, Anthony Walker 18. And I'm also, you just go to our website. It's, www.cornerstonecommercialinvestments.com.
All right, awesome. And then the last thing I have, it's actually not for you, Anthony, it's for you in the audience. It's my public service announcement. It is, if you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine like symptoms, I'm really confident it's the downright hideous subscribe button's fault, which is just down there. And you can get rid of that for free just by clicking on it. And I'm motivated to let you know about that, because if enough people click the button, then YouTube will start paying for these videos instead of me. And I think that would be amazing. But as far as the trade-off for you, as I said, it doesn't cost anything. All it means is that my videos might show up on your list of suggestions, but you can go ahead and ignore those suggestions, because frankly, I really appreciate the fact that you just spent this time with me. Just like Anthony, I appreciate you joining me today. This has been great.
Absolutely. It's been a pleasure. Thank you so much.
Awesome. Thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.